One of the most common questions I receive on this channel is which is better to invest in, individual stocks or exchange-traded funds? Fasten your seatbelts as this is going to be a good one. Investing in the stock market can be an excellent way to grow your wealth and reach your financial goals. However, with so many different investment products or options, it can be difficult to know where you should put your investment dollar. Two of these options include investing in, of course, individual companies or invested in a popular bundle of stocks known as exchange-traded funds or ETFs. Both offer potential benefits and they also come with their own set of risks. Understanding their pros and cons can be essential when it comes to ensuring your investment is diversified enough and that it falls within your accepted risk profile. Join the conversation and let us know in the comments if you are more of an ETF investor or an individual stock person. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and thank you for that click. Investing in stocks involves purchasing directly into a specific company, which then makes you, of course, a shareholder in that company. That stock will rise and fall directly with the price of the company stocks, and that, of course, can be the result of anything from company performance, the economy, or even individual investor sentiment can have a great impact on the price of that stock. An ETF is more of an investment fund that pulls together multiple stocks or other assets into a single tradable security. Generally, an ETF is designed to track the performance of an underlying index like the S&P 500, but can also be bought and sold in a single unit of that ETF. Investing in ETFs gives you a broader exposure to more stocks, and this can provide a good diversification and offer a lower risk profile. What are the pros and cons of investing in? Well, we'll start with single companies. For the pros, there can be a potential for a higher return as a strong performance in an individual company will be reflected in their share price rising. And sometimes, let me tell you, sometimes we're talking about rising quickly. Two, with individual stocks, you have more freedom to decide which stocks to invest in and how many to buy. This makes it much easier to tailor your portfolio to meet your needs precisely. Number three, investing in individual stocks can provide you a better opportunity to beat the market. By doing your due diligence, you can identify undervalued stocks or ones with great growth potential, which can lead to higher returns than the overall market. Okay, so those are the pros. And what about the cons? Well, the first con is that higher risk does come with investing in individual stocks simply because they can move their share price down just as fast as they can move it up. This can add up significant losses, especially if you picked a bad company that is not going to recover from whatever woes it's currently experiencing. The second con is that unless you are buying a lot of individual stocks, you may very well have a lack of diversification within your portfolio. This will, of course, increase your risk and the volatility as well within your holdings. Remember that saying about the putting too many eggs in one basket? Yeah, that's exactly what it's very easy to do when you're only investing in individual stocks. The third con is that investing in individual stocks takes a lot more research, which can make it much more time consuming. And if you are a new investor, you may not even yet have the knowledge to utilize the company's financial statements correctly. Thus, you're opening yourself up for the potential errors that can come from not doing proper due diligence. Overall, investing in individual stocks can offer the potential for higher returns, but it does come with significantly more risks and it requires a significant amount of research and analysis. Therefore, investors must carefully consider their investment goals and risk tolerance before investing in individual stocks. Okay, so those were individual stocks, but what are the pros and cons of investing in ETFs? We'll start with the pros. Diversification has to be the biggest pro. As with ETFs, you gain instant exposure to a more diversified portfolio of stocks and assets with a single investment. That is pretty darn cool. Now, when you are investing in ETFs, you should still go to their website and take a look at their portfolio so you know exactly what level of diversification you're getting. So you know the companies that they have within their basket, because that really can help you keep track of that diversification portfolio that you're building. Number two, an international scope can absolutely be achieved by selecting some ETFs with foreign exposure to markets in other countries, as well as emerging markets. This can really allow you to achieve a foothold in the entire world investing sphere. How cool is that? And the third pro is that you can cherry pick ETFs to give you access to specific sectors or themes. For example, if you are bullish on a specific sector, such as, let's say, renewables, you can select renewable themed ETFs to enhance your exposure to that sector. Or Perhaps if you're a green investor, you can look for ETFs that cater to green investment opportunities. Okay, so those are the pros. Let's jump into the cons. Our first con is that you will generally receive lower overall returns due to the fact that most ETFs are designed to track an index opposed to outperform an index. Of course, if you're looking for ETFs that are geared towards yield, that's a completely different story because you're not really expecting a lot of growth. But you can get, for example, with covered call ETFs, some pretty significant yields coming back in the form of passive income. Let's move to our second disadvantage. So the ETF is managed by a manager that is, well, not you. This means a lot of the ETF's rebalancing is completely out of your control. Sometimes they may drop an underperforming company that you happen to love, and there is nothing you can do about it. All right, and our third disadvantage is there is often a management fee that you have to pay for the ETF. In most cases, they try to keep these fees as low as possible, but they can certainly add up over time, and this will eat away at your return on investment a wee bit. So that's always something to keep in mind. Overall, investing in ETFs can be an excellent way to gain exposure to a diversified portfolio of assets at a lower cost. However, investors must also consider the potential for lower returns and a lack of control over the specific assets involved in that fund. It is essential to consider your investment goals and risk tolerance when deciding whether to invest in ETFs. As an investor, you are not locked into individual stocks or ETFs, and there are plenty of us who mix and match. In fact, I will usually recommend that a brand new investor look heavily at ETFs to get them started for that instant diversification. This allows for a more hands-off approach as you are learning how to figure out if a stock is good or not. Once you are comfortable and want to add in some individual stocks, that is totally cool, especially if you identify one with some serious growth potential. Another option is to start looking at different types of ETFs or individual stocks, such as covered call ETFs or even split core stocks. Both of these are options to look into for higher dividend returns. There are other groups of stocks similar to ETFs, like income funds, that in some cases have some very nice underlying stocks. The whole idea is, of course, diversification, and some of these will do that for you. Community favorite Canoe EIT is a great example of an income fund that a lot of us really love. There are so many options, but it is always best to keep it simple in the beginning and then learn as you go, and only when you feel comfortable should you look or think about complicating your portfolio. In some cases, if you just want a hands-off approach to investing, then these ETFs will be your best friend for sure. The answer to the original question as to which is better, ETFs or individual stocks, is simply whichever one allows you to reach an acceptable risk profile within your portfolio and provides you with the diversification to protect you from any kind of issues within any particular sector. That is what it all boils down to. So is one better than the other? Not necessarily, but they both have their functions, and when used correctly together, can be an amazing duo. Keep the learning going. Watch my video on Enbridge, linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner. See you in the next video.